Good afternoon, everyone. Today, my topic is additions made under Section 69 of the Income Tax Act on the ground of unexplained investment on bank account. So the case here is assessee deposited a cash of 10 lakhs in demonetization period. Assessee received a notice under Section 142(1) for the assessment year calling for furnishing return of income. Assessee submitted the reply that the cash was deposited by her husband and not by her. AO did not analyze all the details and passed an ex assessment order under Section 144, making an addition of 10,07,000 under Section 69 of the Income Tax Act by holding that it is an unexplained investment in the bank account. Assessee carried the matter to the appeal before CIT appeals. CIT appeals observed that AO issued 3 notices which remained uncomplied with. Therefore, without adjudicating the issue on merits, he dismissed the appeal. Section 256 of the Income Tax Act contemplates that CIT appeals would state the points in dispute and record the reasons in writing in support of his conclusion. CIT appeals in this case neither framed the points in dispute nor recorded the reasons before dismissing the appeal. CIT assessee filed a paper book of 69 pages. Most of the pages were the bank statement along with deposit slips. The husband of the assessee also filed an affidavit in the paper book which stated the husband of the assessee in the paper book filed an affidavit which stated uh, that the husband is a competent member of Indian Army and mostly he stayed out of his home place and all the affairs of the family were handled by his wife. Assessee in the affidavit also took the responsibility that he deposited the sum of 10,07,000 only by cash in her saving account out of the accumulated savings. In this case, CIT appeals considered the affidavit on 2 grounds. First, the husband is a competent member of Indian Army, and second, the husband stated that he remained out of the town for long periods and always sent money to his wife. He took the responsibility that whatever is deposited in the assessee's account is deposited by him. On examination of the bank statement and submissions of the assessee, it was revealed that the assessee took a personal loan as well as there was a PF withdrawal. This amount roughly totaled to rupees 9 lakh. The learned AO argued that these withdrawals were made at the end of 2014 and the demonetization period and it should be construed that it is used by the assessee in the before the demonetization period because because the withdrawals were made in 2014 and demonetization period was in 2016. On the perusal of records, CIT appeals stated that considering the facts, considering the fact that the assessee belongs to a rural background and never had taxable income, her affairs can't be expected to be as organized as any other assessee who is in urban area. She had never been a taxpayer in itself is sufficient that she has no unexplained money rather than whatever may be saved from the agricultural activity, husband's salary throughout the life might have been deposited. Therefore, the appeal of the assessee is allowed and it was held that assessee has not made any unexplained investment under Section 69.
इसमें जो हमने पर्सनल लोन लिया हुआ था वो पहले बैंक में आया था और फिर उस पर्सनल लोन को विड्रॉ किया हुआ था।
एक्चुअली पर्सनल लोन हस्बैंड ने लिया हुआ था, हस्बैंड की बैंक स्टेटमेंट को अटैच कर दिया था रिप्लाईज में और हस्बैंड की बैंक स्टेटमेंट में वो आ रहा था अमाउंट।
नहीं तो बैंक में आ गया पर क्या उसके बाद उसने वो विड्रॉ कर रखे थे कैश विड्रॉल से बैंक से जो उसने डिपॉजिट कराया दोबारा
assessee के अकाउंट से कैश विड्रॉल्स थे और साइमल्टेनियसली वाइफ के अकाउंट में कैश डिपॉजिट थे। The ruling's name is Anjali Roy versus ITO.
So what does section 69 say? Because 69 though there are lot of encompasses lot of provisions. There is 68, 69, 69A, B, C. Precisely which section hasn't covered this?
Section 69 is mentioned. Unexplained investment and bank.
So any other clarification or anything? Sorry, thank you. Thanks a lot for
One more. The next top, the next topic is capital gain exemptions on new house purchase in a relative's name.
बंदी हो गया वो। ऑन है बंद हो गया। माइक चेक करो। नीचे कर दो।
Capital gain exemptions on new house purchase in a relative's name. Section 54 and 54F of the income tax provides for the exemptions on capital gains on the transfer of long-term capital assets being a residential house or any other long-term capital asset. One of the conditions for both of the sections is that the house should be purchased is a residential house property within the specified time. There is a big controversy around this section as to whether the new asset so purchased or constructed should be exclusively in the name of the assessee or assessee who is claiming the exemption who is claiming the exemption from the capital gains, or it can be in any other name being the relative of the assessee. There are many views of the court on this issue. Honorable Supreme Court in CIT versus Vegetable Products laid down that if any statutory provision is capable of having more than one view, then the view which is more favorable to the assessee shall be preferred. The Honorable High Court, in the case of CIT versus Sun Engineering Works, held that it is neither desirable nor permissible to pick out a word or a sentence from the judgment or treat it as the complete law declared by the court. The judgment must be read as a whole, and the observations of the judgment have to be considered in the light of the questions which were before the court while taking the judgment. So there are four cases in this topic. All the four cases are purchase of the new house property jointly in the name of spouse. Second is purchase of a new house property in the name of spouse. Purchase of the new house property in the name of minor daughter, and purchase of the new house property in the name of major married daughter. So, explaining the first one, the case law is Ravindra Arora versus CIT. Mr. Ravindra Arora sold a plot of land and purchased a new house property jointly in the name of his wife. He claims the exemption under section 54F with reference to the whole amount invested. The AO allowed only 50% of the exemption claimed to the extent of his right in the new house to the extent of his right in the new residential house. The important factual findings in this case were: it is the assessee who independently invested in the purchase of the new residential house. It was the assessee who paid the stamp duty at the time of registration of the sale deed, and it was the assessee who paid the commission and legal expenses in connection of the purchase. Further, the whole purchase consideration was paid by the assessee, and not even a single penny was contributed by the wife in the purchase of the house. It was held by the court, it was held by the Honorable Court of Delhi that the conditions stipulated in section 54F stands fulfilled. It would be treated as the property purchased by the assessee in his name, and merely because he has included the name of his wife, the property purchased in the joint names would not make any difference. Such conduct has to be rather encouraged, which gives empowerment to women. Whether there are several schemes floated by the government itself permitting the joint ownership with the wife. So the conclusion of this first case is, if the property is held jointly in the name of the spouse and whole of the consideration is paid by the assessee, then the exemption under section 54 cannot be denied. The second case is purchase of the new house property in the name of spouse. The name of the case is V. Natarajan versus CIT. Mr. Natarajan owned a house property in Bangalore. He sold the house property and purchased a new property in Chennai in the name of his wife. He claimed the exemption under section 54 which was disallowed by the assessing officer. It was held by the Honorable Madras High Court that the assessee is not the owner of the property and the capital gains from the said property is assessed in the hands of the assessee. He is entitled to exemption under section 54 irrespective of the fact that the property is purchased in the name of his wife. The predominant judicial view for section 54 is that the new residential house need not to be purchased by the assessee in his name, nor it is necessary that it should be purchased exclusively in his name. The operating point of section 54 is that the entire investment shall come out of the sale proceeds that the entire sale proceeds. Sorry, the operating point of section 54 is that the entire investment shall come out of the sale proceeds, and that there is no contribution from the spouse. The conclusion of this second part is that even if the property is purchased in the name of the spouse, but if the whole of the consideration is paid by the assessee, then assessee would be allowed the exemption under section 54. The third point is if the purchase of new house property in the name of minor daughter. The case is Ram Kumar versus ACIT. Mr. Ram Kumar sold some shares and invested the sale consideration in purchasing a flat in the name of minor daughter. He claimed the exemption under section 54F. The assessing officer disallowed the exemption, claimed solely on the ground that the flat had been registered in the name of the minor daughter. The revenue contended that the minor daughter had a separate legal entity from her father, and her income was clubbed for income tax purposes with the income of her father. Therefore, the assessee and the minor daughter could not be held to be same. It was held by the ITAT's Hyderabad branch that the exemption under section 54F could not be denied to it on the ground that the flat was registered in the name of assessee's minor daughter. It was further held by the ITAT Hyderabad that the bare reading of section 54F makes it clear that there is no requirement that the house has to be purchased in the name of the assessee only. The only requirement for the provision is that the assessee must have purchased the house. In the present case, the fact remains that the minor daughter has to be the beneficial. The minor daughter has no source to make such investment in the purchase of a property. If the assessee who has invested out of the consideration received towards the sale of shares, hence the assessee will be entitled to the exemption under section 54F for the purchase of flat. The conclusion of this is minor daughter shall also be considered as assessee, and the exemption under section 54F shall be allowed in the case if the new house property is purchased in the name of minor son or minor daughter. The last and the fourth case is property purchased in the name of married major daughter. The case is Ganta Vijaya Lakshmi versus ITO. Miss Lakshmi sold an agricultural land and invested the money in purchase of a flat in the name of her married daughter and claimed the exemption under section 54F. The AO rejected the claim as the property purchase was registered in the name of major daughter and not in the name of the assessee. The ITAT Visakhapatnam branch also rejected the claim, stating that the benefit of the exemption under section 54 cannot be extended to major married daughters. It was further held by the ITAT Visakhapatnam bench that the investment have been made in the name of married daughter and apparently she is also major. Thus, it is not a case of joint ownership along with the assessee. The daughter of the assessee shall have every right over the property purchased in her name. Thus, it cannot be said that the intention of purchasing the property was not to benefit her. The term assessee used in section 54F cannot be extended to mean the married major daughter. Conclusion is holding of a new asset in the name of close relative like wife, minor son, minor daughter will not take away the exemption so long as the legal ownership over the new asset is not vested in the beneficial owner. If the acquisition, purchase, or construction of the new asset is done in the name of the person other than the assessee in such a way that the assessee no longer remains the legal owner of the new asset, then he will not get the exemption under these sections. So, no name other than that of the wife, minor children should be unnecessarily added to the documents at the time of purchase of new house.
In the third case, what was the asset which was sold? Ram, Bharat,
Shares were sold.
share.
Shares were sold.
4F has to be given only if it is a movable asset.
Long-term capital asset.
It's not, it does not say immovable.
Any long-term capital asset.
Any long-term capital asset other than a residential house.
Hmm.
So other than residential house, all come into that 54%.
और लास्ट वाले जो केस में आपने ये कर लैंड बताया तो दैट इज द रूरल और
When you are rural to taxable. Any more
This
questions?
is now it's very difficult to say कि minor daughter के केस में allowed है, wife के केस में allowed है, married daughter allowed नहीं है.
Major married daughter allowed नहीं है.
Major married daughter allowed नहीं है. On one hand, they are saying that the section 54 does not say that the assessee has to purchase the residential house in his own name. So जब अगर उसने same fund से purchase किया है और अपने नाम पे नहीं है, so legal owner तो उसके इसमें भी नहीं है. अगर wife के नाम पर है, how does he become a legal owner? He cannot sell that property. Similarly, minor daughter के case में भी he is not the legal owner. Anyway, so the thing is that the law is not really clear and the courts are also not very clear as to what is to be done. Whims and fancies के ऊपर है, किसी में allow कर दिया, किसी में नहीं किया. That is the thing. But that depends on the mood of the judge. Because इसको original judgment जो थी, there were two judgments. B. Natarajan is Chennai High Court. वहाँ पर probably the bench was in very good mood. उसका order पड़ा हुआ B. Natarajan वाला. उसमें वो they say कि what is the problem? He has purchased a residential house in his wife's name. Where is the problem? So allow exemption. It's not a very speaking order. They did not go into the merits of the thing. They simply said कि wife के नाम पे purchase कर लिया ना, there is exemption. On the other hand, there used to be one Bombay High Court judgment in the case of Prakash versus Pushkar. There, the assessee contended that he was an old person, and he said that he had sold his some property, some asset, whatever, and he purchased a residential house in the land case in the name of his adopted son. So the Department of Course did not allow. Before various forums, he argued that I am very old and I was not keeping good health, so I could die any moment. So I didn't want to leave problem for my adopted son. I wanted him to inherit this property. Just because he's an adopted son, so I was expecting that somebody may create a dispute. So that is why I purchased the property directly in his name. And while this matter was still before High Court, the assessee even died. In spite of that, the Bombay High Court said nothing doing. You cannot purchase it in the name of your son. You have to purchase it in your name. So this was Prakash Karke judgment in Bombay High Court. So the point is that it's basically whims and fancies है and ठीक है वैसे products का तो है कि it has to be a liberal interpretation has to be given. There is one Bajaj Tempo ruling also where they say exemption provisions have to be liberally construed because the idea of the legislation is to give exemption to an SSC. So अगर exemption को ही आप इतना strictly construe करोगे तो exemption को ज़्यादा ही purpose defeat हो जाएगा. But anyway, there are things and then amendment is required in the Act to incorporate these differences. Okay. Very well explained. Thank you. Thanks for everybody.